Good morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, welcome back to Insurance Matchmaking. If you were listening last week, you heard me say that we've got two new people in the office. We have Miss Amy Prescott is our new receptionist, and then there's Elijah Ridley, who I've known for years, and he decided to get in the insurance business, and so I lured him away from who lured him into getting his insurance license. So cut out a lot of time. How many? You started doing some of the contracting paperwork. How many companies did you get that going on yesterday? I know you got one back and I've already approved.
Yeah, I applied 6 different appointments for carriers, so hoping to hear back from them today.
Yeah, and like I said, sometimes it takes a day or two, but we'll get you going. That way we can get you training, get you selling. Yeah. That's what I brought you on for.
Well, and again, I know we spoke about this last week, but one of the main things that brought me to Matt Libby Insurance is the fact that, we can completely round out their coverage and cover them head to toe without costing them an arm and a leg. I really liked when you said that. But instead of just offering, supplemental or just offering health, being able to round out their coverage so that way their health care costs never exceed a certain amount each year. That's so important.
Yeah. Because we got, like I said, we've got the health insurance, we got the supplemental, and a lot of times people are like, oh yeah, health, I need my dental and vision. That's great, and we can help you write plans to cover that. But when I talk supplemental, I'm talking about those things that, those critical illness policies or cancer policies. Those things are going to cost you a lot of money if they happen. Gosh, I'm trying to think now. It was several years ago, so the numbers have probably changed, but it was like the average cost of the result of a heart attack was $85,000. That's not what it costs to be in the hospital. I'm saying that's the cost that's hitting that individual.
Yeah.
Because they've got lost wages, they've got hospital bills, they've got just all those. The economic impact on that individual or that individual's family could be as high as $85,000 because of a heart attack.
Yeah, I like to break it down into direct costs and indirect costs.
Yeah.
Your direct costs, that's what your health insurance is for. That's what Matt's here for. That's not what supplemental coverage is for. Supplemental coverage is for all the indirect costs that you know nothing about, that you'd think nothing about until it happens. That's going to be, your loss of income. That's going to be your travel expenses if you have to go somewhere else for treatment. That's going to be maintaining your property. And also, sometimes, again, like Matt said, it can cost up to that's the average cost, $80,000 for a heart attack. And so where's that money coming from? Well, if you're already at retirement age, you're pulling out your stocks, your retirement, and other things like that. And it took you a lifetime to build that, but it doesn't take long to go through it.
No.
And so supplemental coverage, what it does is it handles that gap. So that way you don't have to pull from your retirement. You don't have to cut your retirement short or go back part-time. We want to protect those assets that you've built your entire life. You don't want to have to sell your personal property to pay healthcare costs.
Right.
That's ridiculous.
But I may not have my stats exactly correct, but part of my training when I started with Aflac, and I've heard other people use the same at the time, and of course this was over 10 years ago, so some of these stats could change. But when they did this study back in the 90s, I guess it was, and as I was saying, so the stats probably changed, but it was I think it was 64% of bankruptcies were due to medical costs.
I think that number's only risen since then.
I can say it's probably risen. 75% of those individuals had health insurance. Let me repeat that. 64% of bankruptcies due to medical costs, and 75% of those that had the bankruptcies had health insurance. Health insurance doesn't pay for everything. And I'll talk about the duck commercials, but that's what they talk about. There's those gaps that your health insurance doesn't cover. If you're in the hospital, you're obviously not at work. And just a simple thing is, twisting your ankle. Someone I know, I guess I would anyway, but someone who's older than me twisted his ankle, which of course when he twisted his ankle, it broke. That wasn't the worst part. When he fell, he landed on his shoulder and shattered his shoulder. So he was in the hospital, spent 2 weeks in the rehab center, and he's still recovering from those injuries. So reason I bring that up, now he's retired, and so is his wife, and so she was able to be with him, and because when I went by to visit him, she was there the Sunday afternoon. I was able to go by and visit. And, of course, I've got this cough that I ended up with a cold. So I did, when that popped up, I did not go back and visit him. But think about if you're 40 and you're not an empty nester yet either. So you got kids and got them in school and sports and travel ball and all those expenses. And now you're in the hospital. And so you're not there to help with the carpooling or, and you're not at work. Guess what? So now your family's dealing with you in the hospital. Spouse is dividing their time between you and the kids. And there's a lot of expenses that come up, and again, that's where people get in the bind. And those are the things we can help with. And a lot of times, and this is one of those times, and I'll rail against the Affordable Care Act because everybody just thinks, oh, I'll get this now. Now my health insurance is free. I don't have to worry about. And they get upset and they say, this insurance is crap. It doesn't cover anything because it has a high deductible. And sometimes I'll say it. I don't know. Usually when somebody's saying that, I don't want to feed into their negativity. But no, your insurance covers everything. But you have cost sharing. You have to meet your part. But the beauty is, okay, say you have a $6,000 deductible. You have no maximum out of pocket on an ACA plan. And I go back when I broke my knee. Had to call an ambulance. Ambulance come pick me up. Spent a night in the, went to the emergency room. Spent the night in the hospital. They put me in observation for an outpatient surgery because they weren't going to send me home once I was there with the injury because I couldn't take care of myself. So I was in the hospital. So I spent the night in the hospital. Had that orthopedic surgery. That hospital bill was $28,000. Now I didn't pay $28,000, but that's what the bill was. I ended up with deductibles and such. I had about $1,000 that I had to pay. Guess what? I had other insurance that reimbursed me for that hospital stay and reimbursed me for that ambulance ride. And so basically, really didn't have too much out of pocket, but it sure affected my being able to go to work. I didn't wait 6 weeks to go back to work. Kind of when you work for yourself, I didn't take any sick leave, but I could only go in, I could only work for a couple hours and then the pain would get to me and I'd have to go home. So I spent about a month not really applying myself to my business. So that was tough. So I wanted to touch on that because we've made insurance and health care synonymous terms. Insurance is the exchange of risk. Now, we talk about, you get health insurance, and that ends up being your health care plan, but they're not the same. Your health insurance has a health care component, but the insurance is still the avoidance of risk. Maybe you have a copay for the doctor. You got a $20 or $25 copay for the doctor. That's not what it costs to go to that doctor. You've seen your bills, I'm sure. Or if you say, I don't have insurance, they're going to charge you more than $25. Now, some of them will give you a break and say, okay, no insurance, $75. Some doctors will do that. Some won't see you if you don't have insurance.
Yeah.
So, because it's a risk for them too. Not just the fact of risk of you paying them. There's risk incurred from not doing insurance. So I try to say, I don't know. I'm sorry. Maybe I'm kind of becoming a little Debbie Downer on this one, but it's just how important it is to have insurance. And I'll compare car insurance to health insurance. I'm going to say this insurance sucks. It doesn't cover anything. I'm going to use, for example, I had to have an oil change and new air filter and flush the rear differential on my Nissan Armada. And fortunately, I had a coupon. I only had to pay $229. My car insurance didn't pay one penny of that. My car insurance sucks. They didn't pay for my oil change. That's the same thing with the health insurance. Your insurance is not what's supposed to be paying. Your insurance is for, as we've talked about, if you get cancer, you have a heart attack, you have a car wreck that you fall down the stairs. Because sometimes we get a little confused. We talk about accident plans, and people think, well, I've got my car insurance, and that's the thing. Typically, car insurance will, if you're injured because of the car accident, your car insurance usually covers on it. And there's some of the supplemental plans we have aren't going to pay if your car insurance is paying for that. So, or whoever hit you, you get T-boned. Hopefully that other person had insurance. But see, that's the other problem too, is sometimes that person who hit you didn't have insurance. That's why you want something that's going to cover you.
Yeah, and speaking of how long we've known each other, when I was in my mid-20s, And I actually got a catastrophic illness policy from Matt.
Yeah.
And, knock on wood, I haven't had to use it yet. But I have peace of mind. As a young married couple at that time, one of the things that made me take the jump was if something were to happen to me, me and my wife hadn't built a career at that point in time.
Right.
We didn't have a savings to fall back on. And even if you do, that savings, like I mentioned earlier, it took you a long time to build that up, and it don't take long to get rid of. And so I have peace of mind knowing that if something were to happen to me, we wouldn't have to pull out of our funds. And now I have 3 kids that I didn't have back then. And, our lifestyle wouldn't change if something happened to me because I got with Matt earlier. And, like we mentioned earlier, you'll never be healthier than you are today.
Yeah.
And so, my policy, I got a price locked in when I was in my 20s.
Yeah.
And it's very affordable.
Right. Yeah, that's the thing. The younger you are, and there's a phrase I haven't used in a long time when I talk about life insurance, because I'll talk to somebody like Elijah that's in their 20s or their 30s. He's in his 30s now. And it's like, now is the time for you to get life insurance. Don't wait till you're old and round like me. Because generally, especially like with me, and I say it, I can be very true. I have type 2 diabetes. I have high cholesterol. I take blood pressure medicine. All those little things that make life insurance more expensive. Plus, I'm well north of 50. 50 is 50 and 55 are big milestones when it comes to life insurance. There's plans that it's kind of funny. It's like plans that you can only get this much, or you can only get so much life insurance, or you have to get more. Because like a lot of times, somebody young in their 20s and 30s, I can get you a $25,000, $50,000 life insurance policy. And then with that same company, if you're over 50, you have to get $100,000, or you have to get $250,000. They're going to make you pay premium because you're more apt to use it. It's actually funny though. I had a company that I couldn't write life insurance on anybody under 25 because they considered the under 25 a high enough risk that they didn't want to cover them. They're more. You can remember back in your college days.
Oh yeah.
You weren't as responsible when you were in college as you were when you were a newlywed in mid-20s.
Yeah, a lot of things changed. I mean, I could remember back in my college days not caring about the speed limit signs, and nowadays I have kids in my car and they call me the grandpa driver, even though I'm in my 30s. You see me driving on the road, I'm the type of person that you pass by because I'm going 5 under. Your mentality just changes.
Right. All right. Well, we're up on the commercial break. We'll be back in a minute.
Big news coming from Twin Lakes. Introducing Tri-Lite Mobile, your new wireless solution for the people who bring you better internet. Get started with plans that begin at free. Yes, your first year of unlimited service is on us when you upgrade or sign up for Twin Lakes Internet and enroll in auto pay and paperless billing. Bring your own device or choose a new one and keep your same phone number. Enjoy nationwide coverage, local service you trust, and budget-friendly options that fit your life. Call 931-476-2355 or visit twinlakes.net to learn more. Some restrictions may apply.
Join Habitat Restore at their pop-up donation event every second Saturday of each month at First National Bank in Sparta. The Habitat team will be there ready to go to receive your donations. So don't miss an opportunity to declutter and make a difference at First National Bank in Sparta with the Habitat Restore pop-up donation event every second Saturday of the month.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, welcome back. Hope support those advertisers that were on the break there. And back with Elijah Ridley, newest agent at Matt Libby Insurance. And I mean, I think the ink's not dry yet on the contract. It's been that short time. It's been a couple weeks when you're listening to this show, but as we're recording, it's just been a couple of days. But we were talking about, how insurance is avoidance of risk and getting the insurance when you're younger. And Elijah's used a comment that I use. One thing, maybe I said it to him, and it stuck. That is, you're never younger or healthier than you are today. I know this could be a touchy subject. Your brother, did he have any indication before he knew he had leukemia, or just kind of, all of a sudden it's like, what's wrong? We'll go to the doctor and go, oh, sorry, we got bad news for you.
Yeah, so he was feeling weak for a few months, and it made it hard. He owned his own construction company, JC Company, out in Crossville, Tennessee, and getting to and from jobs, he started working shorter hours and just didn't feel right. And so he went to doctors multiple times, and they said, he's perfectly healthy. And then just one day they realized his white blood cell count was low.
Yeah.
And at that point,
did the further test.
Further test, and at that point, any coverage was too late for him.
Yeah. Well, the reason I bring that up, and like I said, I know you kind of scratch a painful spot there, but people think about, or they put it off, or they'll ask, do I have to, do I have to do this today? Because a lot of times we'll do their Medicare stuff, and they're overwhelmed because Medicare is just overwhelming. It's confusing, and they're kind of like, well, do I have to make this decision today? It's like, no, you don't, but don't put it off too long, because who do you know that's had cancer or had a heart attack? Because you always talk, he had a sudden heart attack, or someone who got diagnosed with cancer was already stage 4 once they realized it's cancer. You said he'd been going to the doctor, was feeling tired and weak, and they didn't and nobody diagnosed it. And I'm not saying maybe if they had diagnosed it early, but my point on that is nobody's like, oh, I better get this cancer insurance because I know I'm gonna be diagnosed with cancer next week. You don't know. You don't know. You don't know when it's going to hit you. And again, with life insurance, there's no guarantee that you're going to get home. In the last couple of weeks, I've had to drive to Nashville a couple times. And, there's a couple times you're going, or oh, my goodness, there's a bunch of red, brake lights up ahead. And you're slowing down. And you're like, well, I hope the people coming behind me realize, you're especially Nashville traffic, it was at least twice yesterday I thought somebody was going to, sideswipe me and, coming into my lane, didn't realize they didn't have the clearance.
Yeah.
So you never know. Like I said, nobody's had a car wreck, nobody's had a heart attack, nobody's got cancer planned on it.
Yeah.
You need to plan for it, but you don't plan on it. You don't say, oh, this is going to happen tomorrow.
Yeah, and, and I don't know how much you've been focusing on the statistics, but cancer and heart attacks are on the rise. Now it's confirmed that 1 in 3 men and 1 in 3 women are going to get cancer at some point in their life. It's just a matter of when and what type.
Right.
And so,
and if you haven't been diagnosed, well, and especially now, I don't usually have trouble selling cancer plans to people that have history in their family.
No, there's no issue if there's history. The only issue is if you've already been diagnosed, and at that point, it's too late.
Right.
And, we mentioned this earlier, Matt, that, people only think about this 2 times. Once is when we're talking to them, and the other time is when it happens, and that's too late. So, there is a sense of urgency to getting it, specifically because cancer, heart attack, accidents, they're no respecters of persons. They don't care how rich you are, how poor you are, how young you are, how old you are. There's 6-year-olds going through leukemia. There's older women going through breast cancer. You never know. And so it's best to be prepared. And, that's why when I was in my 20s and I talked with you, I decided to go ahead and make that decision that day because, I wanted to protect my spouse and my life, my livelihood. And I was never healthier or younger than I was when I talked to you that day.
Yeah. And he took my advice and got life insurance. He just didn't get it from me. but it was one of those, it was a good deal to combine it with his auto insurance.
Yeah.
Because that's one of the things we run into those. Oh, yeah, I've got, $100,000 or I've got $25,000 from my employer. That's great. Guess what? You don't own that life insurance. You're renting it.
From your employer.
Yeah.
Yeah.
Because once you leave that employer, that life insurance goes away. Or that employer leaves you. It does, I wholeheartedly say, you're offered life insurance from your employer, take it. Most employers, like if they offer benefits, they'll offer some at no cost. And then you can add to it. Again, very inexpensive when you get life insurance through a group plan because most people aren't going to cash it in. Do you know that I'm trying to remember if it's 2%, but it's less than 10% of term life plans actually pay out a death benefit.
Really?
Yeah. And it's not because they refuse to pay. Part of the hits the stats because those employer plans are included in that stat. So a lot of people get a life insurance plan. They work someplace for 2 or 3 years and they leave. That policy doesn't pay out. So the life insurance company, that's why that's why they'll charge such slow rates. It's two things. Is one, they know they're going to get paid every month because it's coming out of that person's paycheck as a payroll deduction. And so the employer is paying it. So they know they're going to get that. So they offer it really cheap. The other is most people are not going to be forever in that job. So they're never going to cash in that life insurance. The other thing is, what's term life insurance? It's term. You get 10-year life plan. There's even some companies will sell a 5-year plan, but 5, 10,
20.
40. I think there's some companies that will go up to 40 years on term. Most plans don't go beyond that because they know, you're more apt to cash it in. Yeah, we also can offer plans that have what we call return of premium because a lot of people, whole life, that's just way too expensive. So kind of in the middle, you can get a plan that's a return of premium because usually what happens with a term life plan is you get a 10-year term life plan, you're paying $20 a month. In 10 years, they say, congratulations, you didn't die. Thank you for paying all that money. Would you like to renew this plan for $75 a month? Yeah. Because you're 10 years older now. Now, sometimes that's the right thing to do because who knows what your health is at that time because they'll let you renew that plan without any underwriting. If you waited 10 years and now you're not the health you were 10 years ago, you might not be able to get a life insurance plan, or you have to maybe just get, like I said, I do have what we call guaranteed issue plans, but generally you have to be of a certain age. Some of the plans will go down to, I think, 45, but they're geared again for that Medicare market, and they're more expensive because they're pretty sure they aren't going to pay out.
Yeah,
because you're getting it for those final expenses. And again, a lot of people that I've explained it to Elijah just the other day that sometimes it's not burial, it's not the funeral. Maybe you've already got that covered. When you have retired couple on fixed income, they're both drawing Social Security. When one spouse dies, one person's Social Security goes away. Now, if the one who had the higher Social Security passes away, yes, that surviving spouse can take over their plan to draw theirs, but they don't have what they were drawing to add to it. So it's a lot easier to maintain your household on 2 retirement incomes than it is on one. So a lot of times you're going to downsize, or you're going to, now it's time for mom to move in with the oldest daughter because typically that's who is the oldest daughter, if there are siblings, is the one that typically takes care of the elderly parents. And that's that's another statistic. So I'm not being sexist here. It's a fact. But they need to sell their house. Or they're going to move, now they're ready to move in assisted living because it's just them. They need to sell their house to have the money to pay for that. They don't want to have to take the very first offer that comes. They want to have a little time maybe to shop that assisted living now because now it's a reality that they're not going to be able to stay in their home by themselves. And they need to still be able to pay those household expenses. Because a lot of times, and even if the house is paid off, there's still a lot of expenses to keep a house up. You've got property taxes, you've got utilities, there's maintenance on the home. So there's still going to be expenses. And now that other income's gone, it can cushion that time. You don't have to rush to sell the house and take the first offer that's way below market value because you couldn't afford to stay in it.
And what a lot of people don't realize is when a family member passes away, you're in grief. Yeah. You're not thinking properly. And so you make rash financial decisions that hurt you long term. But if you have that cushion, you can grieve. You can take that time to grieve, go through the process, and then think about next steps.
Well, that's
because you have that cushion.
And that's one of the things I say, if thinking about, as I always encourage people to get life insurance on their children. It's not because, I'm going to make $100,000 because my kid died. It's nothing like that. But that time to grieve, or that, again, we've talked about, the cancer policies and accident policies that, hey, you're not working because you're in the hospital. Maybe you want to take more than a long weekend to grieve the loss of a child instead of having to go back to work because you've got to have that income to pay the bills. You can take some time to grieve.
And I know we spoke about it on the last show, on the last recording, but my brother passed away when he was 32, and at the time I was a sales manager for a company with 16 offices, and after he died. It was unexpected. You know, you never expect your big brother to pass away. And I ended up taking 8 months off work unexpectedly just because I couldn't process that.
Yeah.
And so, you know, having a policy in place gives you that time, gives you what you need, because you don't know how long it's going to take you to grieve.
Right.
Everybody's different. Everybody has a different mentality. Some people, I can take a weekend and go back to work. Some people, and it depends on how close you were to them and how unexpected it was.
Right.
And so, you know, being able to have that cushion is really important.
Well, we've come to the end of another great show. We probably could sit here and record another 30 minutes, but we do need to get to work, and they may need somebody who needs the studio here. But as I mentioned, as always, remember at Matt Libby Insurance, we can cover you from head to toe. It doesn't have to cost you an arm and a leg. Keep listening to Insurance Matchmaking. Please go to insurancematchmaking.com and listen to the past shows. And if you got a question you'd like us to answer about health insurance or life insurance, and we don't always have to just talk insurance. If you've been listening, you know, I being a veteran, I like to get people who are involved in the veterans community. Or if you just have maybe a nonprofit that you're really passionate about and you'd like to share that, you know, reach out to us. We'll get you on the show. So anyway, till next week, stay tuned to Grace 107.7 and turn back next Saturday at 10 for Insurance Matchmaking.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.